ARK investment doubles down on Bitcoin with strategic shift, fueling ETF competition. In a move indicative of the intensifying competition within the burgeoning Bitcoin ETF landscape, ARK Investment Management, led by the visionary Cathie Wood, has divested approximately $16 million from the ProShares Bitcoin ETF BITO and reallocated it towards its own ARK Innovation FinTech ETF, ARKK, which recently acquired its own exposure to Bitcoin through the Grayscale Bitcoin Trust, GBTC. This strategic shift, totaling close to 0.1% of ARKK's assets under management, signifies a deeper commitment to Bitcoin by ARK and underscores the complex dynamics playing out within the cryptocurrency ETF ecosystem. ARK's decision warrants a closer examination due to the firm's influential stature in the investment community. Wood, renowned for her disruptive, technology-focused investment strategies, has garnered a loyal following through her unwavering conviction in disruptive innovation and long-term investment horizons. ARK's flagship ARKK fund, which holds nearly $88 billion in assets as of January 18, 2024, is a testament to this success, capturing investors' imagination with its exposure to companies shaping the future of the global economy. The Bitcoin inclusion in ARKK, although indirect through GBTC, marks a pivotal moment for the fund. While ARK has long held the Grayscale Bitcoin Trust, its presence within ARKK signals a deliberate integration of Bitcoin into the firm's core thesis on disruptive innovation. This move strengthens the narrative that ARK sees Bitcoin as a fundamental building block of the future financial infrastructure, not just a volatile speculative asset. The rationale behind ARK's shift from BITO to an indirect Bitcoin exposure via ARKK can be attributed to several factors. Firstly, BITO, launched in October 2021, tracks the underlying price of Bitcoin through futures contracts, leading to potential tracking errors and basis risk compared to physically backed ETFs like GBTC. Secondly, GBTC, due to its structure as a closed-end trust, currently trades at a premium to its net asset value (NAV), offering a potentially less efficient exposure to Bitcoin compared to a futures-based ETF. By incorporating GBTC within ARKK, ARK leveraged its diverse portfolio to mitigate the tracking error and premium associated with GBTC, offering investors a more holistic exposure to Bitcoin within its thematic framework. Furthermore, ARK's shift could be interpreted as a strategic play within the ETF landscape. By adding Bitcoin exposure to ARKK, ARK strengthens its positioning in the face of potential competition from other thematic ETFs seeking to incorporate digital assets. This move serves as a proactive defense against potential investor migration towards rival funds offering similar exposure, solidifying ARK's place as a pioneer in integrating disruptive technologies like Bitcoin into mainstream investment strategies. However, the implications of ARK's decision transcend the competitive dynamics within the ETF market. This move further legitimizes Bitcoin as a viable investment asset and broadens its accessibility to a wider investor base. ARK's decision reinforces the growing institutional acceptance of Bitcoin and strengthens the narrative that digital assets are no longer relegated to the fringes of the financial system. While ARK's shift is significant, it's crucial to acknowledge the limitations of its scope. The amount divested from BITO represents a small portion of ARK's overall holdings, indicating a measured approach towards Bitcoin exposure. Additionally, the indirect nature of ARKK's Bitcoin exposure through GBTC introduces complexities associated with tracking error and premium, which may not be suitable for all investors. Nevertheless, ARK's strategic move carries a powerful symbolic weight. The firm's decision to integrate Bitcoin into its flagship fund serves as a strong vote of confidence in the cryptocurrency's long-term potential and underscores the growing institutional embrace of digital assets. As competition within the Bitcoin ETF space intensifies and regulatory clarity solidifies, ARK's strategic shift is likely to be seen as a defining moment in the ongoing evolution of the cryptocurrency market. The impact of ARK's decision is likely to reverberate across the financial landscape in several ways. Firstly, it may trigger further interest in Bitcoin and other digital assets from institutional investors, potentially leading to increased inflows into Bitcoin-related ETFs and investment products. Secondly, it may accelerate the development of more efficient and cost-effective Bitcoin investment vehicles, addressing the tracking error and premium issues associated with existing products. Finally, ARK's move may further legitimize the use of thematic ETFs for incorporating digital assets into traditional investment strategies, paving the way for broader adoption of these innovative financial instruments. ARK investments shift from BITO to an indirect Bitcoin exposure through ARKK marks the significant development in the ongoing saga of Bitcoin's integration into the mainstream financial system. While the immediate financial impact may be limited, the symbolic and strategic implications of this move are far-reaching. ARK's decision reinforces the growing institutional acceptance of Bitcoin, fuels competition within the ETF space, and paves the way for broader adoption of digital assets through innovative investment vehicles. As the regulatory landscape evolves and competition intensifies, several key questions remain unanswered. 1. Will the SEC finally approve a physically-backed Bitcoin ETF? The fate of the numerous pending applications could significantly impact the market, potentially rendering futures-based ETFs, like BITO, less attractive. ARK's indirect approach through GBTC may prove prescient if a physically-backed option emerges, allowing them to seamlessly transition their exposure. 2. How will regulatory developments in other countries affect global Bitcoin ETF adoption? Countries like Canada and Brazil have already granted green light to Bitcoin ETFs, while others remain hesitant. ARK's international presence opens them to capitalize on emerging markets, potentially further solidifying their position as a leader in digital asset integration. 3. Can thematic ETFs successfully bridge the gap between traditional finance and digital assets? ARK's experiment with ARKK could pave the way for other firms to follow suit, creating a new generation of investment vehicles that cater to a growing demand for exposure to disruptive technologies like blockchain. Regardless of the answers to these questions, ARK's strategic shift has undoubtedly injected fresh momentum into the ongoing cryptocurrency narrative. Their decision serves as a potent reminder that institutional interest in Bitcoin is not just a fleeting trend, but rather a burgeoning force shaping the future of finance. It's now up to regulators, competitors, and investors to adapt and respond to this dynamic landscape, ultimately determining the trajectory of Bitcoin's journey towards mainstream acceptance. One potential angle to explore further is the impact of ARK's move on Bitcoin's price and overall market sentiment. By increasing accessibility through ARKK, could this lead to increased demand and a subsequent price surge? Alternatively, is it possible that the indirect nature of the exposure and the complexities of GBTC might dampen any significant impact. Analyzing historical data and expert opinions on market dynamics could provide valuable insights into this crucial aspect of ARK's strategic shift. Another interesting facet to delve into is the potential ripple effects on other thematic ETFs seeking digital asset exposure. Will ARK's move prompt a wave of similar acquisitions of GBTC or other Bitcoin-related assets by competing funds? Alternatively, could this inspire the development of entirely new thematic ETFs specifically tailored to blockchain technology and its diverse applications? Exploring these possibilities could paint a vivid picture of the competitive landscape that is likely to unfold in the coming months and years. Ultimately, ARK Investments' strategic shift from BITO to an indirect Bitcoin exposure through ARKK is more than just a financial maneuver. It's a microcosm of the larger battle for the future of finance. While the dust is far from settled, one thing is certain: the future belongs to those who embrace innovation and navigate uncertainty with vision and foresight. ARK, with its audacious yet calculated move, has positioned itself at the forefront of this transformative journey, offering a glimpse into the exciting possibilities that lie ahead for Bitcoin and the digital asset ecosystem as a whole.